This Pitch Breakfast video is brought to you by Spangler and Agins, attorneys for Charlotte's startup community.
So good morning, everyone. My name is Kevin Parker, and I'm the CEO and founder of Helium Loans, and we're looking to obliterate the payday lending industry. So we started Helium Loans to solve some real problems. Customers often need a loan of $500 to $2,500 until their next paycheck. Clients need the funds quickly and are even willing to go into a brick and mortar store to get a loan. Some people resort to payday lending, which quickly spirals out of control. With an APR of over 750%, it's no reason why some people have a hard time repaying these loans. And large lump sum loans of $20,000 or $30,000 don't work for so many borrowers. So we've come up with some real solutions. Our loans are 16 times cheaper than the average payday loan. 99% of our clients receive an approval or denial instantly online. Everything a client needs is on their mobile phone or desktop computer to complete the application, and we get it. Some borrowers have the option of delaying their payment 14 days for free without any interest. They can also extend their loan 6 months online, lowering their overall payments, and good borrowers can even borrow more after just 90 days of good payment history. So our target market includes two individuals. The first is Alice. She's an asset-limited, income-constrained, and employed borrower. She works at a coffee shop or restaurant, goes to school, or maybe has a kid, and she just needs some quick cash today for an unexpected expense. We also have RT. He's an asset-rich, temporarily illiquid borrower. He has his money in the stock market or his savings account, and he just needs some cash today or wants to finance something. So our target market includes Canada, where we're operating today, and the small loan market size is 2.2 billion Canadian dollars. This year, we hope to expand into the United States, where the small loan market size is a whopping 62.7 billion US dollar, much larger even per capita. So in Canada, we have some our typical lengthy approval process lenders. With Borrowell, it takes over 2 days for your application to be approved, and with Mogo, these are still large lump sum loans. Here in the US, we also have Avant and LendUp. LendUp is still technically a payday lender. The terms are short. They're only about 14 days long. And with Avant, the minimum term is about 2 years. So again, they're not an exact match for our offering. So the team is made up of myself, Kevin Parker. I have over 8 years experience doing large-scale financial software applications, and I'm joined by my CFO, Mr. Jack O'Hayan, over there, who has over 10 years of investment management experience. So our client application is quick and can be completed in just 5 minutes. Clients start by entering their email address and password. They then enter basic personal information, such as their name, address, and their employment status. We then move on to what's called bank-level verification. So they actually need to put in their card number and password, and we actually analyze their transactions, their name, address, and email to make sure everything matches. From there, we find sometimes too many stop payments or NSFs, things like that. If they're approved from there, they then move on to a credit check, where we look for bankruptcies or collections or legal action regarding finance. If they're approved, they see their loan options. They can choose where they'd like to deposit. They have the option to do e-transfer or direct deposit. They then virtually sign the documents using their finger or mouse. And then all done, we manually approve the application at the end of things, and they receive their funds very quickly. So our underwriting process is very strict. Of 100% of denied applicants, 17% of them are denied from their basic personal information. So if they're unemployed or bankrupt, things of that nature. A further 60% of them are denied from the information we find from their bank scrape, so such as too many NSF transactions, the income doesn't match, or sometimes we even see the name doesn't match with the bank that has on file. A further 11% are denied from the credit check, where we find bankruptcies, legal action regarding finance, collections, and other things. A further 12% are denied using our new video verification technique, where the client signing up for the application was not actually the same person. So we've reached some incredible milestones today. We have more than 4 times the unique visitors. We have more than 4 times the page views. We issued $110,000 in loans to 130 clients, and we're continuing to see growth. So our ask today is for $1.5 million, 500K of which is an equity stake in our company, and we're looking for a $1 million credit facility backed by the loans themselves. We're looking to partnership with VCs who are already in the space or angel investors looking to get in. Thank you for listening, and please visit us at heliumloans.com.
I'll go ahead and start this.
Yep.
Really nice job in terms of delivery. I loved your opening line, right? We're going to obliterate payday lending.
Yes, we're looking
to. But there was no doubt what your company was focused on, so well done. Loved it. The target, and when you talked about Alice and Art, I love the use of acronyms there,
yes,
right?
Alice and Artie.
It made us understand exactly the type of customer you were going after. I liked your team slide.
Yeah.
You did on your CFO. You kind of did a little bit of that was so rapid there. I would have loved to. I wasn't able to gather.
Sorry,
I know
I'm
it's
sorry.
5 minutes,
5 minutes is
but
a
you
little bit too
again,
short.
if this is an investor pitch, the team is critical, right? So I would have spent a little bit more time.
Okay.
With his background. I did get the CIBC connection with you, so that was good.
Yep.
One of the big issues I would have, again, here that you didn't address terribly much is sort of the regulatory environment around this type of lending.
Yes.
So I think that's going to be, from an investor perspective, a really big issue. So even though it was only 5 minutes, I would have at least had a slide to try to address it.
Okay. Okay. Yeah. Thank you.
Yeah, I thought you did a great job. Just boom, boom, boom.
Yes.
The problem, the solution, the product. I mean, it was very easy. I was drawn in.
Yep.
You made it very relatable. I thought you did a great job.
Thank you.
And that's not easy in 5 minutes.
Yes.
And I think, in terms of, you started, the one question to tease out is, you're doing all this online.
Yes,
and
we
you
are.
talked about a lot of the problem is people going into bricks and
Yes.
mortar. So when you're looking at an online product, it makes it easy. You're able to, manage your acquisition costs likely. You're able to then scale. But what is that in terms of the addressable size of the market? I too had questions about the regulations, but
That's a really good
in the
question.
U.S., what is that addressable size with the online?
So that's a good question. So we're not too sure what the online size is. We're seeing cost per accepted client of about $30 today. So this includes all the denials, because we have to pay for credit checks.
Sure.
And today we have to pay for bank verification. But we're actually eliminating the bank verification, and we're going to do it ourselves. So about 90% of our applications are done from the top 5 banks in Canada. So basically, we can write that code ourselves.
Yep.
And then for the further 8%, we'll use our existing provider.
I'd like to see a little bit of that in there, because again, as you're getting into the U.S. market,
Yes.
it's okay. Well, what is your, you outlined a little bit of the conversion funnel,
Okay.
and that's based on what you're seeing today. What's the actual number? As you start putting marketing against that, what is that acquisition cost? $30 is great today, but it's not going to be $30
Right.
when you're playing and trying to scale this.
Right. So to that point, we did a $300 initial marketing spend. We had 6,000 visitors to the website. It's probably more now, and we've had over 3,000 applications to date with only $300.
That's great. And so,
so
how are you spending that? Are you on Google?
It was Google only, and so acquisition cost is very low, but acceptance cost is a different metric we use.
Okay.
Right. So to bring people to the website, it's quite cheap.
Okay.
Right? If at all. We haven't done any advertising since October. Right.
Well, and I think that speaks to the fact that this is a need. People need
Yes.
the money fast.
Oh, yeah.
And so if you
Oh, yeah.
can put an ad in front of them,
Yep.
and it's your right targeting, and digital's great because you can target
Yes.
people based on certain behaviors. I just would like to see those numbers.
Mhm.
Try to understand and say, okay, of the payday loans, what percentage of them are addressable by online? And you can just say, hey, we think it's this, and we need to validate this.
Okay.
And then to grow from here to here, which is because again, you're asking for money, so your investors are going to want to know, great, what is that? $1.5 million going to result in terms of target? Where is that business going to be, and then
Right.
how much is it going to cost to get there?
Okay.
So I think that you did such a great job on the framing up the problem and say, wow, I want to know more.
Yeah.
But if you want to get the checkbook to come out, you're going to have to really address, I think, some of those pieces in addition to the regulation.
Okay, I will. Thank you.
Good job.
Yeah.
Yeah, that's the top 10% pitch. I've been here for 5 years, no doubt. So good job. So I'll just nitpick in areas because these guys have all made great comments. One thing I think these types of pitches are useful for, other than this format, is if you guys are going to go hit the road and hit, whether it's trade shows or investor conferences or whatever, the random mid-level associate from a VC who's there meeting with 50 companies, and you have 5 minutes, right? So in this regard, in that case, or in that analog, if I'm the mid-level associate that's going to meet with 80 companies today, if you could tighten up a little bit, like your conversion I liked, I think you can spend less time on the details in there and just saying like, hey, we accept, I don't know what the numbers were, I was trying to do the math at the end, but it's like, hey, 6% of our loans actually out of 6,000 unique visitors converted. I don't know if that was the math, but I was trying to do it.
Yeah, it wasn't a ton. So we do that on purpose. We only
of
want
course.
borrowers.
Right, so that's cool, but just tighten up that part and say, here's the yield so far, so many marketing dollars, so many visits, here's the yield.
Okay.
Boom. And now I'm like, okay, I'm locked in. And then you have the weird choice of, or the audience is going to push you towards acquisition strategy versus risk and credit strategy.
Right.
So be prepared to comment on both, but don't let the slides eat up too much of the details in there, because you just want to get that second meeting.
I absolutely agree with you. There are too many metrics there. You want
that associate to go back, and he's going to probably pitch, or she is going to pitch 10 ideas at the weekly meeting, right? And you want Helium Loans to be one of the names that's on the short list for that fund to kind of figure out.
Yeah, exactly.
And that's probably that's how it works. I did that. I had that job 15 years ago, and that's what you want to do. You want to survive the 80 to 10 calling at the Monday morning meeting at the VC firm.
Okay.
Or, hope to meet some awesome angel who's like, I love this, here's $1 million.
We didn't tailor it towards investment. So we do have an investment deck.
Cool.
That does include the yield and things like that.
Sure.
This is more the general deck.
Yeah. Great job.
Thank you.
How about you, audience? What about you? So your customers have to have a banking relationship?
Yes. So without a bank account, there's nothing we can do. We have seen some clients complain about that. They say, I don't have a bank account, how could I get a loan? For us, there's just too much risk involved. We can't debit the account, we can't verify the name or address. It's not worth it for us to pursue those clients. We've literally seen 2 emails out of 6,000 applicants related to not wanting to do the bank verification because they don't have a bank account. So, yeah.
Just one comment on that. I did like your opener, so I'm not contradicting what Dan's saying. It totally got me focused.
Yeah.
It puts you in a weird space, though. When you say we're going to put payday lending out of business, it actually, I was like, all right, are you talking about unbanked and banked? So again, a nit here, but just when you use the word payday, it triggers stuff, right?
Yes.
And it could trigger a thought like, oh, he's focused on unbanked populations, and that's not necessarily true.
Right, but we've seen applicants from all spectrum. So we've seen 850 FICO scores, we've seen 300, right? So it's everybody's just looking for the instant friendly nature of the loan.
It sounds like you're targeting people who don't have a lot of savings, that have an emergency transaction.
Yes.
And again, if you're going back to the marketing and you don't want to pay for that click, you might, and the banking relationship is important, you may just think about your ads and saying, let's have a banking relationship. Obviously you'd say it in a different way.
Right.
But again, it's just a little bit of like, it isn't truly that payday going to bricks and mortar.
Okay.
And one last question. Are you actually going to take the balance sheet risk? Are you going to hold these loans on your own books?
So today we're looking at securitizing it as well, right? So all the loans issued have come right out of my wallet. So I feel that every time we issue a loan that has gone delinquent. So that's why we introduced video verification. So we feel a good number of those loans were actually due to fraud, essentially.
There's a company in Charleston, SnapCap, that has done some of the same sort of thing for like the emergency loans for businesses.
Yep.
It might just be worth reaching out to them to see what they've learned. I don't know if you're aware of them, but they're in the U.S. market.
No, I haven't heard of them. Yeah. I'll reach out.
Yeah, in Charleston, so it's not that far away.
Charleston. Yeah, we were there 2 weeks ago.
And it's a good place just to go.
Yeah. There's a beach.
Oh, absolutely. Don't I know?
What's the delinquency rate that you're seeing?
So today we're seeing a default rate of approximately 15%, but we feel half of that was literally due to fraud. So once we introduced video verification, we had a number of applications that were literally a different person than the ID and the bank's information provided. So maybe it's his girlfriend or something, I don't really know, but it was a guy instead of a girl. That was one example. Another one was a 20-year-old kid using the ID of his 65-year-old dad. So he called on the phone and everything, and I said, well, hey, look, you need to do the video verification. And the video was actually faked. So he ended up using an AI tool or something like that to stitch his dad's face onto a mannequin. Yeah. So kids in their AI. Yeah, I couldn't believe it. So yeah, yeah.
Following on that, I mean, one of the items on your slide said that I think 99% were instant.
Yes.
So how does that comport with your video?
So in terms of instant, I mean pre-approval instantly or denial instantly. There's still about a 5-minute component at the very end that's manually approved, and there's a reason for this, because we see clients who will try to fake the income by just transferring between their accounts again and again, and we find it's very strange. But they do that. So there is still a manual component involved, which is at the very end. Everybody else is just pretty much denied instantly when we find collections, bankruptcies, NSFs, things of that nature.
So one last comment, and I know I said that already, so I'm on my second last comment. So the fraud thing in your investor pitch, I presume you spend a little more time on that, because that's clearly going to be the big bugaboo from an investor perspective, right? How much balance sheet risk am I taking? What are default rates, and how are you mitigating that risk?
Right. So we don't, but we will now. Yeah.
All right, thanks.
Okay. Thank you.